All right, welcome to Traders Talk, and glad for you guys to join us today. And this is the last week for the year, and hope that we can still make it to make some money in the stock market. It has been not so good market for the year, but overall, I mean, if you are trading, it's not necessary that bad market you will lose money. Bad market or good market, you can also make money. Yeah, of course, if you are investing, then of course that's a different story. Some of your positions might be down, and of course, if you have taken opportunity to buy at the lows for certain stocks, then of course it is also an opportunity. Yeah, so there's a lot of ways for you guys to generate income and make money from the stock market. It's just depending on how and when you are actually doing it, and of course, if you are doing it through options, yeah, which is basically the gist of this show, which we are basically talking more about trading the stock market using options, then of course the opportunities to make money, whether the stock market is going up, whether the stock market is going down, or whether the stock market is not moving, is also enormous. Yeah. So all right. So today we are actually going to cover some topics. Of course, we will go through the market updates on the S&P and also the Nasdaq, and then after that we will actually go into a trade digest where we will be talking about trading ranges. Yeah, because the stock market in the current weeks or months, it has been moving up and moving down. So of course, if you are directional, sometimes it is also a bit difficult for you to actually catch the right direction at the right time. Yep. So trading range is also one strategy which we use to actually capture profits or premiums, whether the market or the stock is actually going up or going down, which we'll be covering shortly. Yeah. Yep. So let's share my screen. And of course, a lot of people have been going on holidays. Me myself is also not excluded. Yeah, because I think we missed several traders talk in the past week, mainly because I was also going for holidays after holidays. Okay, it's always good to have holiday, and I hope you guys had your break, Christmas break, and of course this week a lot of people are also off to actually clear their annual leave, or just take opportunity to actually do things that they have not been able to do for the past 1 year. Okay, all right. So let's say, okay, you can see the chart. Okay, if you can see the chart, give me a thumbs up so I know you guys is able to actually see the chart. Okay. Normally, when we actually analyze the market, we will actually look at the S&P 500. Okay, so this is the SPX. Yeah, this is actually the S&P 500, which basically is actually a good indicator of the overall market, because it captures the top 500 companies on the stock market. Yeah. And last week, of course, if you look at the movement last week it was actually here. The market actually came down, and of course, I think on Friday itself, we actually recovered some grounds on Friday. Okay, and I think midweek after the announcement for the GDP came out on Thursday, if not mistaken. Yeah, Thursday. The GDP growth was actually 3.2% against forecast of 2.9%. And of course, good GDP is good for the economy, but unfortunately, the stock market nowadays do not like good news. Yeah, do not like good news. And of course, when good news comes, then especially on the economy, the stock market will actually have a sell down. And of course, why we have a sell down is mainly because of the Fed policy, which is trying to actually sizzle down the economy to run down inflation. and because the economic data is positive, means that the economy is not sizzling down. And when the economy is not sizzling down, means that the policies or the rate hikes that the Federal Reserve is actually doing is actually not working or not as effective. And as a result of that, the fear is that the Fed will continue to be aggressive in its rate hike. And of course, on the last rate hike in December, the Fed has already started its pivot from increasing rates. I think the last four rate hike was 75 basis point, and the last one in December, it actually started to reduce to 50 basis points. Yeah, and of course, the target for the rate to actually go up, the next one in February is 5.1%. Yeah, and of course, when the rate starts to actually reduce in the hikes, that's where the stock market we will not immediately go up. That is actually the positive indicators for the stock market. Yeah, and of course, the next level which the market is actually expecting is actually the stop of the interest hikes. Yeah, so from 75, it actually goes down to 50, and the expectation, the hope is actually for it to go even below 50 to a level where it goes to no hikes. It will stay for a while, and after that, basically so-called reduction in hikes, reduction in rates. Yeah, so that means they will reduce interest rate instead of hike. So of course, once that level where they start to actually reduce, that is actually going to be a very positive for the stock market. So this will probably happen after first half of 2023. Yep. So it's not going to be it's not going to be immediately positive next year. Yeah, it will stay around this level, or might even go down lower. Yeah, as you can actually see in the S&P, right? We are actually here. We are actually at 3844 here. We're actually here. Let me just put this. Okay, we're actually here. Yeah, we're actually here. And of course, the next level, if you look at the patterns, right, we had actually the lowest was around this level, right? And then we actually had a rally all the way up here, and then we had a pull back. Yep. The overall trend is still coming down, where you can see the 200 moving average is still sloping up. But of course, because of the rally since October, right, the 50 moving average started to actually slope up, but we had a small pullback here, right? Basically, I think it's back to the 50 Fibonacci here, and then we actually, I think it's here, 50 Fibonacci. Actually, we had a slight bounce last Friday. Of course, today market futures open positive. And hopefully that momentum can continue. And of course, if it continues, then the next level we are looking at is at this 3,900 level. Yeah, and of course, once it reaches, then of course we would need to actually see if it can actually breach the previous high of 4,000, around 4,001. Yeah, so 3,009 first level. 4,100 second level towards the upside. Of course, on the downside, when there's up, there's also down, right? So on the downside, of course, 3,700. We have been holding quite well at 3,800 for the whole of last week. 3,700 is one level. If it moves back to the downside, this 3,700 level is one level to actually watch for. And of course, the level here, which is basically about 3,005, is back to the bottom of the market, from the highs early of the year. Yeah. So hopefully we can hover around here for a while, around this range for a while, and not go down below 3,500. If we can actually maintain this level, then of course it would actually be quite a lot of opportunities here to actually pick up some stocks or even enter into long trades, start to actually enter into long trades when there are actually opportunities for a pullback up. Yeah. Okay. So this is S&P 500, and then the Nasdaq is actually quite bad. Nasdaq is actually quite bad. As opposed to S&P, right? You can see that Nasdaq is actually closing really close back to the all-time low around this level here. Very close. Yeah, I think here is about 10,500, and today we are at 10,000, about 11,000, 10,985. Yeah. So it's about 500 points back to the lows for the year, yeah, 500 points back down. And of course it is not impossible for it to actually come back down. Of course, the next key event would actually be in February. That is actually the first rate hike for 2023. Yeah. So monitor the levels. First rate hike 2023, February. Yeah. And of course, until then, it would actually be the normal monthly CPI release. The inflation data release every month somewhere before mid of the month. They will actually release the data, yeah, January, and then of course February. Yeah, so of course that is another key event for us to actually watch out for. And of course if inflation continue to come down, that is actually quite positive for the market. And of course if inflation is not controlled and it's actually continue to go higher than expected, then that's the time where the market will actually come down. Yeah. Then the other indicators where we actually look out for is of course the VIX. Yeah, the VIX, and of course we use this VIX quite actively. This is actually the volatility for the S&P 500, and we actually use this quite actively to actually monitor the levels of the market. And of course, when VIX is high, meaning that the most likely the market is actually coming down. Yeah, when VIX is high, yeah, this like at levels of 35. Highly likely you will actually see that the market is actually down. So this is, for example, 11th of October, right? Then we can actually see SPX. So 11th of October, let's take this out. Uh, 11th of October is somewhere where. So you can see 11th of October, the market actually dropped all the way to about 3,570, 3,570, and you can see that 11th of October, the VIX is actually at almost 35. Yep. So the correlation for this, there is actually very high correlation. When VIX is actually high, most likely the market will actually come down. And of course, when VIX is very low, you look at the 2nd December. And 2nd of December, yeah, you can see that 2nd of December, the October rally hit the highest level, and then after that, it actually came down back. You see, this is 2nd of October. 2nd of October, you reach the high here, yeah, and this is the lows, and then this was the December one, which is somewhere here. Yeah, you can see high correlation. So of course, this VIX, the highest was 35, the lowest was 19 here, and of course today we are actually at about 22. Then this again, you have to watch how VIX develops in the following months. It may also even go lower if the market goes back up, then you will actually have another level of lows, and of course on the highs, most of the time, for I think for the past 1 year, basically 35 is the highest level. Okay, so of course, if you are trading, then you look at these indicators to see when is the time you should actually long the market, and when is the time you should not long the market. Yeah, of course, during time when the VIX is actually low, then of course there's possibility that the market will actually come down because of the market being overbought, and then the market will actually come back down and VIX will actually go up. Yeah, so it's always the opposite side. Yeah, so very important. Look at these indicators when trading. The same indicator can also be used as a gauge for you to enter or exit so-called trades, long or short trades. Yeah. Okay. So let's close this. Okay, let's go back to Nasdaq. Yeah. So Nasdaq, yeah, as I said, it is actually at its close to its lowest point, and of course today itself, the futures have actually gone up by almost about 60 points. Earlier it was higher, than in the evening it actually came back down, and hopefully when market opens, the Nasdaq would actually recover back some grounds, and of course the levels which we are actually looking at is around this level. If it goes back up, then this is actually 11,400 level is one of the key levels which we are looking. 11,500 level, yeah, one key level upwards, and of course down is 10,000, around 10,500 points. Yeah. Okay, so yeah, so again, like I said, it's very difficult to predict the market. Yeah, sometimes it goes up, sometimes it goes down, and of course, if we how to say, if we long the market or long the stock, then it comes down, then it's very painful. And of course, if we short the market and then it goes up, then of course it is also painful. So rather than doing such kind of trades, right, we can actually also do trades where we basically trade a range. Yeah, and of course, if you look even at let's say SPY, right, even if you look at SPY, then of course there is also a certain range where it is actually trading for the past past 3 months. Yeah, for the past 3 months, you can see that it trades on the higher range of this level, which is 410, and then of course on the low side, basically you're looking at about 360. Yeah, 360. So basically that is the range, and of course now we are at about 380, and of course if you look at the range, then basically we are almost in the middle of the range, and of course there is possibility to actually trade range here. But of course S&P 500, SPY, which is the ETF for the S&P 500, right? The premium which we can actually get for credit trades, we're talking about credit trades, the premium which we can actually get is actually slightly low, because the IV for this is actually most of the time quite low. Yeah, quite low, unless the market actually goes down a lot, then of course the IV will actually be high. But in general, I would say the IV is actually not that high. As a result, the premium you get is actually slightly lower. Then of course, in order to actually get higher premium for trading range, then we can actually either go to a stock, trade on a stock with high IV, or even other ETFs or other ETFs. And of course, today we actually want to cover one ETF, right, which is actually XBI, yeah, XBI, and okay, let's see what this XBI, yeah, XBI. It's actually a biotech ETF, and this biotech ETF is actually made out of companies here. Where is the companies? Top 10 holdings, yeah. So these are the companies in this ETF. Most of the companies, I don't know them. Yeah, Ocugen, yeah, of course. Then these are the top 10 holdings. But basically, you can see that the ETF is actually quite spread out. Yeah, even the top 10 holdings is only 8.6%. So of course, when trading ETF, and of course when you are actually doing credit trades and all, right? So ETF is actually how to say, safer because it is not likely to gap up or gap down. Yeah, because if just say for example this Intelia Therapeutics actually go up by 10%, the effects is only 1% of the stock, yeah, of the stock. So of the ETF, so it is actually not likely to gap up or gap down. Yeah, so that's why even if you are actually looking at the trading range, right? Then it is not likely that it will easily breach the range. And of course, let's see the chart here. What's the range? When you look at this chart, right, you can see that XBI, I mean, it has actually been going up since September. Yeah, the same as the market since October. The market is actually going up, right? And of course, there is actually some sell down due in mid of December. Yeah, here it came down, and of course, it is actually hovering around these levels between 80 and 82. And if you look at the bigger range, right? Bigger range, you can see that it is actually at this level 87, yeah, to the lows at about 75. This is actually the lowest, yeah, 87 to 75. Okay, so this is actually the first step for us to see at which range level the lowest and highest for the past, you can use for the past 3 months. Where is the range? Okay, once you actually got the range, right, you look at the stock price. Where is it within this range now? Where is it within this range? Okay, and of course, if you look at the price now, is actually at about 80, right? 80. So it's actually 80 is actually $5 down and $7 up. Yeah, so it is basically more or less in the middle of the range, yeah, of this range. Then next, of course, we look at how to trade this range. Yeah, how to trade this range, and we most of the time when we trade range, right, we actually use strategies such as Iron Condor. Iron Condor is actually one way where we can actually trade range. Yeah. And it's actually a defined risk trade. Then you will have a max gain and also a max loss on trade entry. Okay, on trade entry. So let's jot down the range 87 and 75, right? 87, 75. Yeah. Okay, so once we determine the range, then we actually move to the trading platform. Then you look at let's see. Look at the trading platform. Let's put the platform up. Okay, so if you can see the trading platform is up. Yeah, so this is the platform. Okay, so for those who are familiar, then this is actually the Tastyworks platform. Yeah, that I mean you can use other brokers, but basically this Tastyworks platform is actually one quite good platform for options trading. Yeah, because their main focus is actually for options traders. Yeah, not so much for stocks, but more towards options. And of course, the whole platform is also skewed towards assisting and helping you to actually look at the look at the IVs and the data, so that you can actually enter trades or review trades quite easily. Yeah. So if you look at XBI, IV is actually at 37%. I hope you can see my cursor. IV is actually at 37% here. Yeah. And then the other indicators which we look at is IV rank. Yeah, IV rank. And of course, the IV rank for SBI is at 20 at the moment. I mean, to do credit trades, then of course we want the IV rank to be higher. The IV for 37 around 40 is fine. The IV rank anything above 20 would be nice. So it's 19.7 is close, but let's see how much premium we can actually get. Then the other thing which we look at is the liquidity. Liquidity is 3-star. Yeah. So of course, the higher the liquidity, the better the better the spreads are for the trade. Yeah. So the spread is actually the buy and sell spread. Yeah. So 3-star is actually good for entry. 2-star is not good for trades because the spread will be quite big. Yeah, and of course 4-star is the best. Yeah. So then the next thing which we actually look at is which expiry should we actually go for. Yeah, which expiry. And of course you can see that they are weekly and they are monthly options. So most of the time I would actually enter into monthly options, mainly because the liquidity for monthly options would be much higher. Yeah. And of course, if you look at the next monthly option expiring on 20th of January, it has expiry of only 24 days. Yeah, 24 days. So 24 days is actually too short of a time frame to actually enter into trades, and we tend to actually look at expiry 45 days, at least 45 days. Yeah, 45 days is actually the optimum. You can do 40 is also okay, 39 is also okay, but the optimum is actually 45. And of course, we don't have 45. We either go for the 3rd of February, which is 38 days, or we actually move on to the following expiry, which is the monthly 17th February expiry, which is actually 52 days. Yeah. So I mean, as I said, I would prefer to trade monthly options. So it is 7 days more than 45 days. So of course, I would try to actually see if we can actually do any trades using 17 February expiry. Okay. So again, very simple to actually structure out an iron condor. An iron condor is basically four-legged trade, and basically on each side of the trade we have a credit spread. On the put side, basically we have a bull put spread, which is bullish direction, and then on the call side we have a bear call spread. Yeah. So to structure out, we just need to understand we have two spreads, one on the upper side, one on the lower side. So just now we actually looked at on the lower side is 75 price, right? 75. So this is actually 75 here. Yep, 75. So this is 75, and then on the upper side is actually 87 here. So 75 and 87. Okay, so if you look at the other indicator, which is actually shown here, is actually the expected move. You can see on the right side here. I hope you can see my cursor. On the right side here is actually an expected move of 894 for 52 days expiry. So what it means is that XBI is actually expected to move down by about $9 up till in the next 52 days. Yeah, so basically $9 less of 81, right, is actually $72. Yeah, $72. So the expected move is below the range which we looked at just now. So that is actually one thing which is positive for us. Yeah, so we have some buffer. And then on the upper side, if you look at the expected is 9, right? So 81 plus 9 is 90. 81 plus 9 is 90, right? So on the upper side, basically our range, right, is actually below the range which we look at, which is actually at 87. Yeah, so on the downside we have buffer, but on the upper side it seems that we are actually the expected move is actually above the range, which is also better because how to say, it expects to move up by $9. It is $9, and if you're putting at 87, right, so there is actually likelihood that we will actually breach this 87. Yeah, is breach this $87. Yeah, so there might be some risk on this side. Yeah, so to reduce the risk, of course, we don't want to actually do it at the range which we look at the chart. We try to actually just use the range which is actually shown here, which is $9, right? Then $9, which is 72, right? So 72, we just do at 72. Yeah, 72 instead of 75. We take more buffer, right, all the way till 72, which is at 20 delta. Generally 20 delta is actually a safe level for you to do a trade. And then you come back here, which is at 90 just now, right? 90 is at delta 24, right? 24. So this 72, you need to actually do $5, right? I do a $5 spread. So for the bull put spread, I get 80 cents credit. And then on the upper side, basically I do slightly above one expected move, $1 above. I do at delta 20 also, 91.96. Then of course this we will get just now was 80, right? 80, almost about 80 cents again. So it is actually 157 here. Yeah, so 157 is actually the premium which you get. And then of course the max loss which you will actually get is 343, yeah, which is basically 500 less of 157. So once you are comfortable at this, the probability of profit is 65%. For an iron condor, which is a neutral trade, 65% is actually quite good. And then the probability of you reaching 50% of 157, which is close to 80 cents, is actually 78%. Again, very high probability trade for this. Yep. So once you are satisfied, you just enter, send the order, then the order would be in. Yeah. So of course, you look at again when the market opens later on in tonight, right? Then you look again at the price at that moment. Yeah. So just choose delta 20 for you to actually choose the strike price for the for both legs. Yeah, the bull put spread and the bear call spread. And if you merge together, then basically that's an iron condor. Yeah. So if you look at the analysis here, you look at the analysis here. Okay, let me go back. Okay, let me just do it again here. Let me take, okay, 70, it was 71, right? Analysis. Okay. Let me see table. Analysis. Curve. Where is the analysis? Positions. Okay, I couldn't get the analysis up. Okay, normally it will show here. Okay, basically let me just show you in the chart here. Let me show. Back to the chart, right? Okay, 72 and 91. Okay, all right. So here, if you look at the chart, right? So 72 and 91. Okay, so 91 here, and then 72 is here. Okay, so this is actually the range which we entered the trade, right? And of course, the risk profile would actually be here. 92. Okay. Okay. So basically here, the risk profile would, this is your trade. So basically the risk profile would be here. Yeah. So this is the range. Of course, if the price move, this is actually 92 and 92.71. Let's see. This is 92. This is 71, and the trade which we enter is 67.96. 67.96. 67, yeah, 72, 96, 91, yeah. So this is the trading range. Anything within 91 and 72, you would actually get 100% of the profit of that $1.60. Yeah, of course, if it moves up above 91, then and be still below 96, you will still get to get some profits, but of course it's not 100% of the profits. Yeah, and of course anything you go beyond 96, then you would get the max loss. Yeah, and of course the other side, anything beyond 67 you get max loss, anything below 67 you will get some profits. Yeah, but not the max profit. So 72.91 max profit. Yeah, so 72.91 max profit. Yeah, so this is actually quite a big range for you to actually trade on this stock. I would say it is actually quite safe. Of course, the duration, if you need to actually look at the price action, because the duration is actually quite long, 52 days. Yeah, and of course, if the price actually moves high, right? High goes up all the way here, right? Then of course, most likely the price would actually be how to say, the position or the stock would actually go more likely over to an oversold position, and of course the chances of it coming back below is actually high. And of course, if it goes down below here, then it is possibly oversold, and chances of it bouncing back is actually quite high. So that's why I say this trade is actually quite safe to actually enter for this XBI trade. Yeah. Okay, so of course the safest is once you reach 50% profit, which is at 80 cents, then you actually exit the trade. Then you don't need to actually keep the trade so long duration. Yeah, so you can actually take less profit and then look for other trades or wait for other opportunities. Yeah? So that's the how to say, safest way for you to actually protect your profits is to actually exit when you reach 50% profit target. So I hope you guys are clear of the trade, the Iron Condor trade on XBI, and of course we will put on we'll try to actually put on this position later. This is for ourselves. This is for myself, because I look at entering this trade for myself. But of course, whatever I teach you guys today, it is for education purpose and not a trade recommendation. Yeah. So please bear in mind. Okay, so the other things which I actually want to talk to you guys is actually on our newsletter. Okay, if you have already subscribed to our newsletter, then you would have actually received the newsletter through another platform, a new platform which we had to use. Because the old platform, which is actually under review of Twitter, is actually shutting down. Yeah, so I would say this is probably lack of staff, or probably Elon Musk cutting down costs or firing too many people. I mean, some of the platform or services within the Twitter ecosystem, right? I think there would be chances nobody is actually manning it, or it is not just profitable. Cut costs, because they're not making money. So we have actually moved our platform to here. We have actually moved our platform to Substack. You can actually let me just see this. You can actually get the link here. I can copy this link over to the chat. Okay, you can also get it from the chat, which I've just loaded there. So Substack, let me just show you Substack. Okay, so this is actually our newsletter. Basically, if you subscribe to the newsletter, it's totally free. It's totally free. So I don't charge anything for this newsletter. It goes out every Monday. Yeah, I try to actually put it out early morning. Yeah, of course, sometimes if I'm busy, then of course it goes out later. So, but I try to actually send it out as early as possible. So you can actually start the week with some view about the market, where we actually talk about where the market is and what we personally expect the market to trade in the current week. Yeah, for both S&P and also the Nasdaq. Wait. I think I did not share the screen to you guys. Let me. Okay. Yeah, it's sharing. Okay, good. So let me just go back to Substack. Okay, so we talk about this, and then of course the other thing is we also try to actually put in some education series into the newsletter. And of course, not every week. Sometimes we put some education series. Sometimes we post some videos. Sometimes we actually do some trade digest, trade analysis within this, so that you can actually learn something from the newsletter. And of course, this week we did actually a series on selling of calls. Yeah, selling of calls. When do we sell calls? So this is actually quite detailed for you to actually get an idea of this trade pattern which we actually do, and when do we sell calls. Yeah, so it's quite lengthy. I mean, to write sometimes is a bit difficult rather than talking to you guys, right? But of course, it gives you a good reference if you actually want to jot it down or keep it somewhere, or yeah, as a record of the articles. And of course, we also give out the links of our previous shows here as a reference, and then there are also some TikTok videos in our TikTok channel where you can also get to actually learn about trade setups, also sometimes just dissemination of some information through these videos. Yeah, so there are a lot of things here. Yeah, so do have a read at it. There is actually a link to subscribe. If you have not subscribed, I recommend you to subscribe, because if you subscribe, then it will actually come to your mailbox straight on. Yeah. So on top of that, of course, when we did the migration, we basically also had to so-called bring over. I think here is almost about 92 past issues. And of course, each issue again, there are actually a lot of contents inside, where you can also look at the contents, right? So for example, let's look at this issue 91. What do we have? We talk about something about Hong Kong options, yeah, and then previous issue, maybe issue 90. What do we put here? Sometimes I also forget what I write because every week we actually talk about something new. So we spoke about low VIX equals to low premiums. Yeah. So we spoke a bit about VIX and premiums, and basically what are the takeaways from this, and many more contents for you to actually refer. Okay, so you need to actually go in and look at the articles, because within it we do not spell out what we actually put inside. Yeah, but of course, if you follow us every week, for those people who follow us and read the emails which we send to you every week, then of course you would be up to date basically what is the contents which we put in here. Yeah, so this is talking about neutral trades, similar to what we have actually covered today. And of course, if you want to actually refer after our show here to neutral trades, how to actually set it up, then you can actually look at this issue, which is actually this is actually issue 84. Yeah, issue 84. You can actually go and refer to issue 84. Yeah. Okay. So so that is actually our newsletter. What else? I mean, and by all means, when you look at our newsletter, please give some likes or share it to your friends. Yeah, for those people who have friends trading and they do not know us, then of course it would be great help for you guys to actually help disseminate this information, because there's lots of effort and things put in there to actually help traders or people who actually want to learn to trade by using some of these things which we disseminate out every week. Yeah, the show is one, the newsletter is another one, and of course the ad hoc videos or TikToks which we do is other avenues. Yeah. So if you engage with us, we will continue to actually give out more contents so that it can actually make 2023 a better, more profitable year for you guys, and for us to actually also grow and learn together and be better in the world of trading, especially in the options. Yeah, because options is actually something quite difficult to, I would say, quite difficult to master. And of course, with guidance, then it makes things much easier. Yeah, much easier. Okay, so hope you have a good last week of trading in 2022, and then we'll see you again next year. And hopefully next year will actually be a great year for everybody. Everybody, whether you're a trader or whether you're an investor. And I wish everybody a happy new year, best of health, best of wealth. Yeah, so I see you next year, and happy trading. Bye bye.